Now come to this question number 37. Here also same to same concept like our previous question only, but now it is definitely the building by itself. Now since it is already a building, you can consider the same to same explanation, which is explanation 5 to section 43.1. Now this has purchased a house 2 years back on January for rupees 10 lakhs. Okay. Now till 1st May of the previous year, it was self-occupied, and now it is brought into the use for the purpose of medical profession. So now it was previously a personal use property. Now it is converted into a business use property. What would be the depreciation in no other building? If there is no other building, then you will just have to calculate the notional WDV. Okay, and notional WDV is going to be your the cost of that particular asset. Now another house was gifted to him by his father, who had purchased the same 3 years back in the month of May for 9 lakhs. Depreciation is 10%. Okay. Now another house, if your father have already gifted to you, that means you have acquired this particular asset by means of a gift. Okay. So in that particular case, another explanation will be applicable. Asset acquired by means of gift, will, inheritance and all that. Okay. So for that the explanation is explanation number 2. Any asset which is acquired by means of a gift, will, inheritance, etc. Okay. Then actual cost of the previous owner will be reduced by the depreciation actually allowed with respect to that particular asset, or the depreciation that would have been allowable. So it is something like your notional WDV, whatever is your actual cost minus the depreciation so far, and this figure is going to be the cost of that particular asset. So that we are very simple, pretty simple once you know these particular explanations.